The trillion-dollar economic stimulus plan was supposed to create jobs and turn this economy around. There's been a lot of press lately about how the jobs numbers were not as bad as were originally feared. Joining us now from the Heritage Foundation is James Sherk for a closer look at these numbers.
Thanks, Michael, for having me on. There was a lot of press about the jobs numbers coming in, not quite as bad as what people had thought they were. The problem is that's not really quite the case. The economy lost only about 450,000 jobs, which is less than what people were expecting. But that was because the federal government increased hiring by over 70,000 workers, and most of those new census workers. Well, if you've got a job, that's certainly better for you than not having a job. But that's worlds away from saying that the economy has turned a corner. The government can tax other Americans and spend that money to create make-work projects or projects like the census all day long, or increasingly borrow money from our children in order to fund these jobs. That's worlds apart from private sector employers finding an opportunity to create wealth, to add value, to innovate, to be entrepreneurial, and creating value in the economy that gets things moving again. If you look at the private sector employers, then they really weren't that much better at all than the month before. It's only the increase in government spending. There's been a lot of press about layoffs going up, and that's true. Layoffs have gone up. Workers are more likely to be laid off today than they were 2 or 3 years ago. What hasn't attracted nearly as much attention is the fact that employers are also creating fewer jobs. Businesses are hiring fewer workers because they're basically trying to hunker down and try and make it through the recession, and they're not innovating, they're not expanding, they're not adding new divisions and the like. And so job creation has fallen by about 10% a month. In any given month, you would have had about 4.5 million new jobs created. Well, now we're down to only about 4 million new jobs being created each month. And that explains a lot of the job losses that have been going on.
So what is the problem?
Now, the problem is what Obama wants to do to fix this problem is not going to fix the problem. The stimulus bill was a massive new federal job creation program. That's what he sold it as. That's what he's touting it as being. But these aren't the jobs to create lasting wealth in the economy. You can have the government decide to build a bridge to nowhere, and you're going to employ thousands of people and spend tens, hundreds of millions of dollars building that bridge. But when the federal money runs up, all you've got is a bridge that doesn't do anything. That's the problem we have with the stimulus. They're spending so much money on these projects that are going to add very little value to the economy. It was basically everything on the Democratic wish list on what to spend. Well, that's all well and good in terms of doing stuff in the here and now, and we'll see some job creation from that. But when it's done, all we'll have spent a lot of money and not got very much of productive value in the economy. And the problem with all of this is that's money that could have been spent by actual businesses and by entrepreneurs to create real jobs that will create lasting wealth that are a foundation for prosperity. Because Obama's taken this $800 billion in stimulus and is running trillion-dollar deficits as far as the eye can see, he's sucking up all the capital that businesses could have used to invest in their companies. When the economy starts to turn around, we're going to see interest rates rise rather sharply. So if you're a business owner, and you're thinking about, well, maybe I'll borrow some money from a bank to invest in this new division or in this new project, or maybe you're trying to start up a business and you want to borrow money to get your business off the ground. Well, it's going to become quite a bit more expensive for you to do that because Obama's taking all that money. He's taking all that capital available to be invested and pouring it into the government, to government jobs. So we'll have bridges to nowhere, airports to nowhere, all these federal make-work projects being created left, right, and center. But we won't have jobs that innovate, that create value, that add worth to the economy. It's going to be crowded out by the huge size of the government. And so we have a government that's growing bigger and bigger and bigger and taking up an ever larger share of our lives. But that's not going to leave as much room for wealth to be created in the private sector, and that's the ultimate lasting foundation for prosperity.
Well, do you actually see signs of the economics turning around?
Eventually, things will turn around. We haven't seen the signs of that happening yet. Again, the quote-unquote good news from this last month's job report was that there was all these new federal jobs with the census. Well, those are going to be gone in a year when the census is over anyways. Those aren't good long-term jobs. And we're not seeing the private sector job creation kick back up. You've got businesses very afraid that tax rates are going to rise in a year or two. Fortunately, Obama hasn't raised them now. But if you're an investor and you're seeing that Obama's promised to raise taxes on saving and investment quite a bit more, Well, you take that into effect, and you're not going to invest as much now because of that. If you're a business and you're afraid of something like a card check being passed and your workers being forced into a union because they don't have a secret ballot on it, well, unions are terrible for businesses. They're terrible for business health. And so companies are becoming more reluctant to do things like this as they're looking down the horizon, seeing all these very anti-business, anti-growth measures being proposed. And on top of that, we've got all the money that well, not all the money, but a lot of the money that could have been invested in the private sector economy being sucked away by the government. Well, government bureaucrats we're already seeing it. They're giving the money out to their political friends, to those with the political influence. Take a look at what's happened to Chrysler. We had basically the bondholders were forced to take massive losses in order to see to it that the union didn't have to make very much in the way of sacrifices. Well, certainly the union the workers are much more sympathetic than the banks, although there's a lot of pension funds invested in those bonds, but more immediately sympathetic than the bondholders and the banks and the Wall Street fat cats. But who's going to loan to a unionized company again if you know that despite what the law says, despite what the contract says, that you've got collateral, that you get repaid if the company goes bankrupt, we're actually just going to come in and see to it that you take all the losses and the union really doesn't have to take that much. Because of this very short-sighted action, it's going to be extremely difficult for unionized companies to get investors willing to spend money on them, willing to give them a loan, because they know if things go south, despite what the law says, they're going to be the ones forced to take the loss. So they're not going to do it as much. It's a very short-sighted action that the administration did with Chrysler and probably with General Motors. It helps their political friends right here, right now, but in the long term, this is bad not just for the bondholders, but it's bad for union members in general. Their jobs they're more likely to lose their jobs because unionized companies will have a much harder time raising money because the administration simply decided to ignore the rule of law with the Detroit automaker bankruptcies.
James Sherk, thanks for being on the Savage Nation.